Gold and silver pop with rising oil dragging U.S. equities along for the ride. Gary Wagner joins us for a brand new chart. Gary, thanks for being with us on Kitco News.
It's great to be here. Great to be here.
So what a week for gold, the metal hitting a fresh 3.5-month high today. It seems the bullish momentum is back for gold. So let's get your take on the metal's winning streak here this week.
Well, we've certainly seen a turnaround. You know, it's been under such dramatic pressure from the end of last year going into the first month, January. And it almost seems like January was in like a lamb, out like a lion in terms of gold. And a lot of the play started, I believe, as a safe haven play. But now we have some real weakness that came into the U.S. dollar. On Wednesday, U.S. dollar was down about 1.7%. That's a tremendous drop in value for the dollar. Thursday followed suit. It was also down. So we've got that momentum building that is really a big part of the move that we're seeing in the rise of precious metals.
But, Gary, we have jobs numbers coming out tomorrow. Do you think that could be a game changer for gold here?
It certainly could. It certainly could. But my sense is that depending on where the jobs report is not really as important as the dollar. And the dollar, of course, will be affected by the jobs report.
All right. Well, Gary, that said, what key levels are you eyeing? As you mentioned, gold passed through the important 200-day moving average this week. So let's take a look at your key levels here.
Absolutely. I think one of the most significant things that we have seen is the fact that when we look at a 200-day moving average in gold, that is clearly been breached. That came in at around 1131. So we've got really good support in that area. Anytime you look at an equity or the S&P, if it is in a bullish trend, it has to be above the 200-day moving average. Now, we have seen occasions where gold prices have moved up past the 200-day moving average only to come back down. But to get to a bullish scenario, you first have to break above. In terms of the upper levels that we're looking at, we have a top at 1162 and then one again at 1180. Those are potential resistance areas. Then you have some very, very superlative resistance up at around $1,200 per ounce.
All right, Gary, let's wrap by talking silver prices, which also scored a 3.5-month high on Thursday. Is the metal just riding the coattails of gold here, or is something more at play?
Well, I think that since we are a dollar-based metal, both gold and silver are reacting in the same ratio to any weakness in the dollar. One thing that we have seen on many occasions is that when the precious metals run, silver will tend to outperform gold in terms of percentage gains, and the reciprocal is also true. Percentage drawdowns when we get corrections. The most important thing to realize is that silver will tend to overperform in terms of percentages when the metals run.
All right, Gary, thanks so much for your thoughts today. We'll see you next week.
Have a great weekend. I want to wish all of our Chartist viewers prosperous trading next week. Bye-bye.
Thanks, Gary, and thank you for watching this edition of Kitco News. We'll see you tomorrow.